Hello and welcome. Today, we're tackling a big one. How do you find some financial stability for your retirement when, let's be honest, the economy feels anything but stable? Let's jump right in.
You know that feeling, right? You look at your retirement savings, you look at the news, and you feel that little knot in your stomach. The market's a roller coaster, and it's a really tough environment to be in when your future is on the line.
And that really gets to the heart of it. People are looking for a safe harbor, a place where they can protect their hard-earned nest egg from all that uncertainty. Because predictability in retirement, well, it isn't just a nice idea, it's an absolute necessity. So that very real need for stability is what leads us to a specific kind of financial tool, one that's designed to take all the guesswork out of your growth. It's called a multi-year guaranteed annuity, or you'll often hear it called a YGA. Now, don't let the name intimidate you. Think of it like a personal contract you make with an insurance company. You give them a lump sum, and in return, they contractually promise, to pay you a fixed interest rate for a set number of years. And the best part? Your initial investment is completely protected from market risk. To really get a handle on how a MYGA works, it helps to compare it to something you're probably already familiar with, a certificate of deposit, or a CD. Now, both of them guarantee your principal, which is great. But here's where the magic happens, the growth. With a CD, you have to pay taxes on the interest you earn every single year. But with a MYGA, that growth is tax-deferred. That means your money gets to grow without the government taking a slice each year, letting your interest earn more interest. It's a powerhouse for compounding.
So what does this actually look like in the real world? Let's walk through a quick and simple example to see how your money's journey could play out.
Okay, let's say you've got $100,000, you want to keep it safe, you want it to grow, but you absolutely do not want the stress of watching the stock market every day.
So you decide you want to lock in a guaranteed interest rate for a 5-year period. And remember, this part is up to you. You're in the driver's seat. It could be 3 years, 5 years, 7 years, whatever best fits your personal timeline and goals. The whole process is incredibly straightforward. 1. You make your deposit. 2. You pick your guarantee period. 3. You sit back while your money grows at that fixed rate, with interest often compounding daily. And 4. When the term is up, the power is back in your hands. You get to decide what to do next. Renew for another term, take your money and the earnings, or even turn it into a steady income stream for life.
All right, let's peel back the layers a little bit and get into the nitty-gritty. Understanding these key features is absolutely crucial because it helps you know for sure if this is the right fit for your plan.
You know, this quote really hits the nail on the head. It perfectly captures the main appeal. For so many people, especially as they get closer to retirement, job number 1 is making sure their savings are shielded from a sudden market crash. So let's just recap those core benefits. First, you get total principal protection. Your money isn't exposed to the whims of the stock market. Second, the growth is guaranteed in a contract. You know exactly what you're going to get. Third, you get that powerful tax-deferred accumulation we talked about. And finally, it's super flexible. You can use it for your IRA, your Roth, or even with after-tax money. Okay, now for a term that can sound a little complicated or even scary at first, the market value adjustment, or MVA. Let's demystify this, because it's actually pretty simple once you break it down. Here's the simple truth. The MVA only comes into play if you decide to take your money out before your guarantee period is over. It's basically a way to adjust your withdrawal based on what interest rates are doing at that moment. But, and this is the most important part, if you simply hold your annuity until the end of the term, the MVA doesn't apply at all. It has zero effect on your money, period. Oh, and here's a really important little detail for anyone who has an IRA. If you're at the age where you have to take what's called a required minimum distribution, or an RMD, you can usually take that money out each year without having to worry about any of those early withdrawal charges or that MVA we just talked about. So after hearing all that, we land on the big question, the one that really matters. Is this tool actually right for you? Let's see if you fit the profile. This chart gives us a fantastic snapshot. Look at that big slice of the pie. That's pre-retirees. People who are getting close to retirement and just want to protect what they've built from any last-minute market drama. But it's also a great fit for savers who just want a better rate than they can get from a CD, and for people already in retirement who want a portion of their money to deliver safe, predictable returns. So, the bottom line is this. If your personal financial philosophy is all about safety of principal, if you love the idea of knowing exactly what your return will be, and if you're a long-term planner, then this kind of tool was pretty much designed with you in mind.
And that leaves us to our final, and maybe the most important question of all. There are a lot of different insurance companies out there, and they all offer different rates. So how on earth do you make sure you're getting the absolute best deal for your situation?
Well, this chart says it all. It's really night and day. You could go to a single insurance company and you'll get their one offer. Or you could tap into an entire marketplace where over 100 carriers have to compete for your business. And when companies compete, you win.
And that's really the ultimate takeaway here. Finding financial stability isn't just about picking the right product. It's about finding the absolute best version of that product. An independent broker acts like your personal shopper in the financial world. They do all the homework, compare all the options, and find the most competitive solution that is perfectly tailored to your retirement goals. It ensures you're using this powerful tool to its absolute fullest potential.